Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top percentage gainers from Friday. First up, let's look at ticker symbol PLAN. Okay, this is an IPO that just started trading on Friday. As you can see, it did close up 35%. It had an interesting day. You could see here it dropped all the way down here to right below 2150 to low of day, and buyers came in and they drove the share price all the way up. It closed just above the open. Okay, you could see the bottom of this candle. That's the open, and so the there was a lot of trading way down here in 21, 22s, and the bulls were able to drive it up all the way above the opening price for the close, closing the share price green on the day. So after being down, to the 2146 low of day, that was really nice close, driving it up to 2430. That's making it look better for next week. As you can see here, there was a very nice spike on accumulation distribution, and so that long lower wick, what that's showing us is that traders were loading off of low of day for a potential move higher. So how do you trade an IPO? I think the best way to trade an IPO is by using the intraday charts. And for the first day, this is where you can find the support and resistance levels. And so right now on this 15-minute chart, the big level to break is going to be the closing price here at 1045, and so that's right there below 2470. That's going to be the big level to break. If it can get above 2470 and start forming candles above that level on the 15-minute chart, that's going to signal it wants to head higher. If it hits this 2470 resistance zone, then that's going to, and it fails to break, that's going to signal a temporary top. It's come down and filled the jar, and so it came all the way down to the bottom, and now it's worked its way all the way up to the top, and so it's going to be all about breaking that 2470 to head higher. Right now the candles are riding EMA 4 support here. You can see they broke above the pink line right here, and notice all these candles have closed above the pink line. Right now that's the level to be watching, 2392. If you see a close below that level, that will signal consolidation. If it were to drop below EMA 13 at 2337, that would be the stop loss level. It's going to be a risk to hold if it starts forming candles below that level, but keep an eye on EMA 4. It will be a bearish change in trend if that level fails to hold on Monday. Okay, let's look at EARS. Okay, so this stock made a really nice move last week, closed up 44%. You can check out RSI and FASTO are both at very frothy levels right now. You've got RSI up here at a level where it peaked out at here the last time it took a little pause on the break above that 100-day simple moving average. So when you're up here 79.80 on FASTO or RSI, that's really high, and you have 97 on FASTO, there's not a lot of juice in the tank. Okay, so you want to be careful here. It's coming up and it's hitting this key resistance level. This is an unfilled gap from back here in June, and so the gap is between low of day on this candle and high of day on this candle, and the bottom red line is the bottom of the gap. If it fails to break above that level, that's going to signal a temporary top, and the candles could work back into the bands. If the candles do work back in the bands, you want to see EMA 4 at 75 support hold. If that were to break, it could come down here to the 100-day simple moving average at 55 to retest support. Now to the upside, if it can bust through the bottom of the gap, what you're looking for is a breakthrough the second red line, which is the top of the gap. That would create what we call a gap fill. That would fill the gap, and then if it can stay above that second red line, look for a run up to the 200-day simple moving average at 164. Keep in mind, Friday's candle did form completely above the upper Bollinger Band. Many times when that happens, the candles work back into the bands. I'll show you recent examples of that right here. White candle above the upper Bollinger Band, work back in. White candle above the upper Bollinger Band, work back in. White candle above the upper Bollinger Band, work back in. White candle above the upper Bollinger Band, work back in. Is history going to repeat, or will this be a change in trend? I think you got to really respect this unfilled gap here, and if resistance fails to break, look to reload lower. Okay, let's look at YGYI. All right, super strong move. Okay, check out the sector that this is in, the consumer staples food products. When you have a consumer staple stock that is the play of the day, up 40%, that's very telling. Okay, that means the stock market has become defensive. Normally you'd be seeing a technology stock or something with a little more growth than a consumer staples stock putting on such big gains. This shows you people are getting defensive right now, or they have been, and so you've got RSI up here at very frothy levels. You can see this is where it tops out at, so you got to be careful here. This is where it could take a pause. You have FASTO up here at 87. You do have plus DI above 40. This is frothy levels for plus DI, but it has been pushing hard, and it's been in a very, very strong uptrend on the daily chart, as you can see here. Once it got above the moving averages on this white candle here, that signaled the push higher. It did come down here and test that middle Bollinger Band zone on the 8th, support held, and it got back above EMA 4. Right now, watch 1088, okay? If that level breaks, that's where it could consolidate. It could come down and test EMA 8, possibly EMA 13. On a big pullback, you would have the middle Bollinger Band on deck. As long as EMA 4 is holding, the bulls are still super strong and it can keep pushing higher. Just keep in mind it did close well above the upper Bollinger Band, so you could see it pull back in to test support. You could see here there was huge volume, big old volume spike on Friday. If you look here on the monthly chart, this will give you an idea of where this could be headed. As you can see on the monthly chart, it's above 70 on RSI. That's a really frothy level. The only time it's been at this type of level was back here in 2011 when it made it the run to the all-time high up to 42. Okay, so right now you also have Fasto at 90. This is the level that it topped out at back here in 2015 when it found resistance. Okay, you have plus DI here at 45. When you get above 40 on plus DI and ADX, that's a very frothy level. You can see it topped out at much lower levels in the past, and so yeah, up here the only other time it's been able to push was that all-time high run back in 2011. Okay, now let's look at the candles. What it looks like it's doing here is filling the jar. You know, it had this sideways channel for multiple years, and this month it's breaking out above the top of the sideways channel. That's very bullish. This closing price here in 2015, an April high close, that's the key level to stay above. If it could stay above that level, it could push higher. Right now, you've got this 16 resistance zone. That's from the closing price from back here in 2011. And then you have this 19 level, which is just above that. And if you can get above that 19 level, you know, at 28 is the all-time high close on the monthly chart. You know, it could be working its way back up to that level. It might not happen in one fell swoop. I mean, it could have a parabolic run like 2011, which it's been having right here. There was huge volume last week. Look at that. The largest volume in the history of the company was 17 million shares. The only thing is it's pushing well above the upper Bollinger Band. If the candles did work back into the bands, look at EMA 4 at 836. Now keep in mind, since this is a consumer staples stock and it's running with the market under pressure, if earnings season heats up and technology and other sectors start running, people might start selling their consumer staples winners to buy some of those growthier names heading into the end of the year. So that's something to keep in mind on. Okay, the easy gains on this have been made, and so now you've got to be really careful here. You know, it's pushing above that upper Bollinger Band, and when that happens, many times the candles do work back into the bands. Okay, let's look at ACRX. This was the talk of the day on Friday there. You know, big talk in our chat here about this trading halted with their FDA advisory committee. They're going to review their drug here. And so the meeting, okay, they had their meeting, and now we're going to be looking to see, you know, how this opens up. If it does open on Monday, I'm anticipating it's going to open on Monday. I haven't heard any different, but we'll just have to see how long they keep it halted. So yeah, so this stock is in play. It's in a halt right now. They halted it on Friday, and as you can see, there was a gravestone doji formed. You could see the doji candlestick, and so it's going to have to break above that 4 resistance level to head higher. If you look here on Thursday of last week, it closed above the middle Bollinger Band at 365. So that's going to be the key level to hold. You want to see it stay above 365. And then the two big resistance levels on the daily chart are right here, the high close in June, which is at 420, and then you have the high close here at just about 460 right here, which was on the 24th of September. So if it can get above 420 and then close above 460, that's when it could really get moving. You can see there's really big volume the last couple days before this halt, so it looks like people are anticipating good news. We'll see. You know, there's always smarter money out there that has better information than the common retail trader. If you look here on the weekly chart, you can see the upside potential for ACRX. If it can break above this 420, 425 resistance zone, which was the high close from back here in June, then you have this gap that filled back here. You've got this 470 level, and then you have the 300-week moving average up here at 519. 2019, that's lined up with the high close just above $5. And so this 300-week moving average high close from back in 2017 are going to be the two big levels to break. Now, if it can get above this 5 to 519 resistance zone, there is this gap from back here in 2015 between low of day this week and high of day this week. And so the bottom of the gap is right up here above $6. And so that's always a tough resistance level to break. If it comes up there and it hits the bottom of the gap and it fails to break that level, that could signal a temporary top. On a really big run, you'd be looking for a gap fill and a run up there above 850. Okay, keep an eye on ACRX this week. Please come check out the chat. We're charting stocks every day. Lots of winners, lots of education, lots of great information. We'd love to have you there. Okay, thanks. Have a great day.